Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Next Week, the weekly stock market analysis show where we look at what happened during the last week in the markets and how we can plan for a better trade for the next day. Remember, this is analysis from May 9th, Monday, tomorrow, 2022. So let's get into it and see what happened from the charts. So this is the weekly candle of the Nifty and the Banknifty that you see here. Yeah, clearly evident bearishness that is. It's a wide range bearish candle that you see. Also making note that it's at the previous resistance zone from where it had broken out, and now it has taken the support for that. So change of polarity bounces could be possible in the weekly. Right, clearly in the bank after the same situation, but you can very well see that it's a downtrending channel. That's clearly evident here, right? Before that, let's look at the daily charts also. So daily it's indecisive, dodgy. It's a gap down. On a daily basis, Friday after 2 days of clearly bearishness, it's gapped down and has fallen to the 16 the support zone basically, right? That's a gap down indecisive dodgy is what exactly is the daily candle is. So very short term it's indecisive to go for the down or not, and in the long term just in the medium term it was clear bearishness that is evident, and right now it is support zone. Another support zone is there, but overall you can see that it's a trending channel, and another trending downline channel is there on top of that. So it is basically broken out and then fallen back into the channel, and is given out all the moving average supports that's there. Banknifty is clearly on the downtrend. So Bollinger Bands is showing expansion on the downside, clear bearishness that is evident on both indices. Look at the distance between the median and the downtrend, it's far away, so clear bearishness is what indicates further, right? But at the same time it's at a support zone. The gap was there in the Banknifty. In the Nifty there is a gap support as in Banknifty, also a small gap was there. It's also negated now, so bearishness is what Bollinger Bands is saying. Let's look at specific numbers. So last week we lost 4%, both indices 4%, Banknifty and Nifty, right? 691 on Nifty, 1478 points in the Banknifty, and it is resisting below the weekly 50 WMA, forming wide range bearish candle on the weekly basis, right? Both the same, right? Wide range bearishness. Doji candle is there, and we have seen that. Also you can see that there is a head and shoulder, that pattern that is clearly visible. There is a head and shoulder pattern clearly visible. There is an M pattern. So both of them have necklines at these levels, and that neckline is breached clearly on both indices. So price pattern, another reason to be bearish, but still CIP bounce possibility is still there, right? Bollinger Bands, we have seen that it is clearly bearish. So bearishness all around. Look at the support resistance level. So first resistance is to clear this 16,350 level, then 16,550 to 16,650, then 16,700 to 750, then 16,800 to 16,900 for edge 38, then 70,000 rounding number resistance, and then 7,200, 300, 7,350, 400, and then 7,500, 600 is the Fibonacci 23 retracement. Downside support would be 16,200, then 15,850, 950, which is a major support, which is Fibonacci 61. After that 15,500 to 15,650, then support 15,350 to 15,450, right? So that's a previous swing low. Breach of that will create another swing, a lower low, right? Banknifty also same, right? Look at this, supports 34,350 to 34,750 is the support that can be seen first. If that's breached in 33,600 to 34,000 levels with Fibonacci 61, it's a major support that we have to watch out for. There is also a support of the window gap that is still there, it's not breached. The downside, if 34,000 is gone, then 32,400 to 32,800. Then below that you have the swing low 32,000 nearby levels, right? That this breach means you have a lower low, another lower low that is. So basically you can see that flat breakout did not sustain, fallen back with the trend line channel, and there is head and shoulder, and there is an M pattern, doubled up. All this have breached the necklines, and then bearishness can be seen. Resistance to the upside similarly is at 35,000 levels for 50th Fibonacci. Then 35,600 to 35,900 levels, and above that 36,300 to 36,800 Fibonacci 38, and then 36,900 to 37,000 levels, and above that 37,500 Fibonacci 23 retracement level, where we have a resistance that is there, which has to be cleared. So that's the support and resistance level that you can see in the Nifty and Bank Nifty. Moving on, the momentum in the trend analysis, if you see the Nifty is bearish trend, bearish momentum basically, and bearishness is it's a further falling momentum, so the bearishness is further happening, and then Bank Nifty it's still sideways, managed to be there. Let us see for the next week. It's taking a support of the target 40 around on the medium term. It's the weekly, right? Bank Nifty is also bearish and falling further momentum, so clear bearishness that is evident in the short term. Medium term managed to be in the sideways, and then there also the falling of the downside falling momentum is what you can see. So no divergence are seen on the momentum as of now. Looking at the ADX indicator, the indicator for the trend, you can see that it's bearishness that is there both the weekly and the daily. Short term and medium term it is bearishness, and the bearishness is increasing, rising. The strength trend there, you can see that in the next slides. Right? You can see that there is a rising trend strength. That means the bearishness is increasing. Bearishness is increasing on the short term. Bearishness is increasing on the medium term also. Trend we have already discussed. It's in the bearish also in the short term. Medium term it is just hanging on the sideways. So that's about trend and momentum indicators. What do they say? So bearishness all around there also. Volatility has spiked up about 20 and it is 21.5. It was a 9% up move that happened again, spike up, right? And it is about 20, so obviously you have to be cautious, stay out of the trade or play cautiously, cut short your position size. Operators data for the futures is showing that it is it's a short build up that is there. These put call ratio is showing it's bearishness 0.45 and 0.56 is what you see in the Nifty and Bank Nifty. So bearishness and short build up in Nifty open futures, and so Nifty, so that is what VIX is, VIX has spiked again, and the open interest is showing clear bearishness on the PCR and the futures OI. And the May 12th 2022 expiry also, you can see that it is clear build up of on the options open interest. We are seeing that it is clearly large amount of call writing that is happening here, right? That is what you see. So clearly bearishness is evident there also. Look at the range of 15,100 and 17,000. It's a very wide range of nearly 2,000 points, right? For the highest put and call writing is seen, and 16,000 and 17,400 is for the second level of highest put and call writing, where the supports and resistances can be seen. And 34,000 and 36,000, 2,000 points in the Bank Nifty is where the highest put and call writing supports are seen as per the option writers. 34,500 and 35,000 points is the second level of support and resistance that can be seen. Put call ratio is bearish. We have seen futures open interest also bearish. So overall bearishness can be clearly evident from the open interest, but 0.4345 is kind of bottom. So it may consolidate for some time and rise a little bit, and then again it could fall down. So overall open interest analysis shows that bearishness, put call rating is what you see majority, and then bearishness is evident. Levels we already seen. Match up these levels with the support and resistance levels that we identify using the Fibonacci and all that previous charts, right? Now the analysis of the sectors, sector-wise analysis. If you see, we have the charts here. IT index bearish, right? So it's almost all the sectors except auto and FMCG is side. Every other sector is bearish on the short term, right? IT is bearish on both in the, on weekly and so both time frames, weekly and the short term, both it is bearish. Metal is turned to bearish, and although medium term is sideways, auto sector is the one that is hanging on the sideways in the mid short term, and pharma is also turned to bearishness. Reality had big fall of 8% down, bearishness, right? So FMCG auto still has some hope of having not fallen to the bearish zones, but otherwise big fall. IT 3% down, metal 4% down, reality 8% down, right? FMCG 2.5% down, pharma 4.7% down, auto 5.2% down, metal 4.2%. So this big fall, clear bearishness evident on the sectorial approach as well. This is what you see, right? IT sector is, there was a bullish direction which got negated now, and next support could be at this line where it is. It may consolidate for some time. Metal, you can see that it has given a multi-year breakup, week or multi-month breakout that had happened, but did not stand fallen back the support zone, and then momentum also is going to slip sideways. We'll have to see whether it is going to hold this level or going to further go down to the zigzag movement once again or not. Auto was also giving hope, and it was trying to break out and almost did half a breakout, but did not manage to close above that resistance zone, and then it has fallen down to the wide bearish candle, right? And momentum remains to be sideways. Pharma also, the sideways momentum is at a support zone. Pharma has slipped down and is trending downside in a trend line channel, and momentum will it take the support of 40 and bounce up is what you have to close watch. FMCG also showing very good momentum. It was breaking out of the support zone and it was heading towards bullishness, but right now the bullishness has been negated and the sideways movement is what you see, and it may be taking a rest at the support zone from where it tried to break out early. Reality was showing bullishness. It was in a cup and handle breakout pattern on a weekly basis, but look at this now. It is at a support zone. We have to see whether support will be taken at the momentum or not, because we have a bearish open is will be low kind of candle pattern and we have a support here. So it may consolidate the support zone before taking another price to move up. So it's what you have to hope for, right? That's what reality. So all the sectors we see some strength in the auto and the FMCG. Otherwise all sectors are showing clear breach of support and lack of momentum. Index heavyweights, if you see HDFC remains to be weak and is in the bearish zones in the short term. On the medium term and short term, you can clearly see that it is attempted to do a big breakout of the out of the breakout news, and it did not happen, not sustained. It has fallen back to the support zone and it's consolidating there. It attempted to move further but failed and then remains in the bearish zones. Stay away from HDFC twins. HDFC Bank HDFC also is having bearish momentum and it has already slipped down the major support zone, and then it was trying to climb back but it's unable to do that, right? Lines were showing considerable strength, but last week was clear bearishness and it lost the momentum to sideways on a weekly basis for the lines. We'll have to see whether this will do, is this retracement enough, and is it over, and is it going to further consolidate and move further up is what we have to look out. But it all depends on whether the momentum is going to remain sideways or is it going to climb back and keep a close watch. But otherwise it's only because retracement has happened in the last 10 weeks or so. This is only worst because retracement has happened, so probably it may be over and then it may consolidate and instead of falling down. But it was an account neck. It was a break. The cup and handle pattern breakout that happened. After that, a flat pattern breakout also happened with a huge bullish moves in it. Right? Although it was clearly showing bullishness, but it looks like when the entire market is falling, it could not catch up with it, and it has fallen. It almost hit the all-time high as well earlier. Moving to the next, Infosys IT stocks are not doing good. Seems to be consolidated as a gravestone by Doji. In this series that you are saying, it's at a major support zone. So question is whether the support will hold good or will we go back downside. TCS is managing all of the trend line channel and the momentum is in the sideways. Infosys could not maintain it in sideways, it's at various zones, but TCS somehow is maintaining it in sideways on the weekly basis. So clear bearishness in both the IT stocks. ICICI Bank was showing strength, but last 2-3 weeks was clear bearish. This C candles and this almost came out the support zone and then heading towards the next ascending triangle breakout support zone, and then we'll have to see whether it holds good or not for the next week. Surprisingly, Kodak Bank is showing consolidation and then some bullishness, and the support seems to be a very confident level where it is not ready to fall without that. So clear bullishness. So when all the other banking stocks are not doing good, but for some reason at least it's consolidating and showing green candles, even though it's not consistently moving. The momentum is sideways. So that's the index heavyweights. None of them are doing great. IT especially is not doing great. Banks are also struggling, but Kodak sees some growth and clients also give some hope. Institutional participation, if you see, it was 12,700 crores of selling again. So as usual, if I continuously sell, DI is continuously buy, but this time DI buy is not enough. That's why market crashed. That longs also looks a little more flat. So moving on, global markets and US markets, bearish. You've seen that it has lost a major support zone and it has breached that and closed a small body indecisive candle, and it almost tried to climb back, but the very next day it falls. So it was 1,000 point up move and then 1,000 point down move. It's kind of move that happened, but it was clearly bearish on the medium term also on the Dow Jones Index, and same can be seen at used 100 is the Nasdaq, where you can see that it is at a major support zone. Whether this support zone also, second support zone, also will be breached or not is what you have to see. And so this is bearish momentum on the weekly basis also. So clear bearishness on the medium term and short term is seen on all the indices. S&P 500 also has breached the support zone and then formed as indecisive small body candle, and the momentum is moved to the bearish zones. So clear bearish is on medium term and short term in the US markets. So we'll have to keep a close watch on whether it is going to get into a big crash, or is it over or done with, is what we have to keep close watch. Since US is the mother market, our markets cannot escape from the sell-off that happens, the bearishness that happens in US also, right? So we'll have to keep a close watch. So it all depends on that now, right? Global cues are not great. So crude oil is also not good. Look at the momentum is climbed back in the bullish zones, and you can see wide range bullish candles again, and it looks like it's heading back to the 13 years, 109%. So it's not ready to close below the 100 even for a week. Gold was falling down now and is losing momentum on a weekly basis, but it looks like it is forming a bounce up, a hammer kind of pattern, and then it may be trying to consolidate the same level instead of falling down further. So if your market is the stock market is falling down, probably it may make a third attempt to move to the all-time high of 2074. So as of now, momentum sideways, and then at a major support zone for the gold. To fix ITC is deep bullish even when the market is retracing 4%. Right, ITC is excellently doing great. It's at a resistance zone as well. We'll have to see whether it breaches that and moves to the channel top or not. There is a possibility of that because it's a halfway confirmed bullish reverse divergence that you're seeing on the weekly candle. So it's powerful, and then it's clearly trending, and a lot of strength is in depth in this sector as well. Another sector that was doing good is power, and then clearly you can see there is a divergence of reverse bullish divergence which can take the market up to the channel top, and rounding pattern breakout on the weekly basis also can be excellent swing opportunity. The NTPC, right, is doing good momentum, good trend, good volumes, good pattern, good trending channel, and a clear breakout from a resistance zone. So both of them shows bullishness, even one is power sector and the other one is FMCG. Both are showing clear bullishness despite the fact that the market is struggling. Now, once again, it's a double diagonal counter spread that I have for the Nifty. For some reason, this gives me a very comfortable range of 15,700 to 6,900. So very good range that I'm getting there. Risk reward may not be immediately attractive if you look for full profit taking, but if it is 2% that you're targeting, it is good probability of profit and good risk reward also. Break-even is giving the good probability, and break-evens are the what I primarily look for double break-even, and that is the only way you can get that. And capital size can be as per your portion sizing, can be as per your capital, increase or decrease the number of lot. But this seems to be good and could be working for the next week of May 12th expiry, right? That's Nifty double diagonal counter spread. Now to wrap up markets, my view is moderate bearishness. There's no need to tell the reasons because I already studied the several last slides. Momentum is bearish, trend is bearish, price pattern bearish, volatile is picking up, Fyers is selling. What more you need to have bearish view, right? Moderate bearish views I had, that's what the chart says. Now we had a RBI surprise rate interest hike that happened last week. That's the reason for the 4% sudden punch, which is unexpected. It was supposed to have happened in June, and it happened ahead. We are the CRR and repo rate 4,000 high. US inflation is still at high level, 50-year high level, and they're struggling with that. US markets are crashing. So Russia Ukraine war is still happening. So there is all the uncertainty is still there in the market, and VIX is showing that. Right, rupee is weakening, crude is rising. What more you need? Positive factors are very less. The thing is, there is good confidence of retailers and the domestic institutions in our markets. That's why we're not crashing. And the economy is strong. Money keeps coming in from the retailers in the stock market. So growth is happening and all that is there, but global growth as such is not that great. The chart is showing there is a change in priority. Possibility is still there. That is possible. But always remember that there can be it's clear chart patterns are clearly bearish. Index is about 20. So medium term, you have to look at 18,350 and 339,500, which is very far away, and that's where you seems to hope that there is a rally that is coming back. But till then, you don't know whether it's consolidating or it may be moving down. Right? How far it will move, you never know that. Right? So downside 5650 is something you have to watch, and 32,000 monetary is also free, but you have to watch for the Banknifty. These are levels where the previous lower low is formed, and if that breaches that, you can go further down, and then it may settle at some point, and then it goes back. Once you reach that, we will find that next level of support, but these levels has to be watched closely on the downside and upside. So overnight risk questions are possible. Overnight events can wipe out your capital, so always go for current spreads, vertical spreads, non-directional spreads, whatever. Right? Option strategy is what it's just defined and hedged completely. So because the high volatility can do wipe out of capitals if you are not careful. So intraday price acts very difficult, as we say. The weekly basis, positional trades can give returns if you're studying the charts well, right? Go with the trend, right? The trend is bearish, then your strategies that you have to apply on the options has to be bearish, or mildly bearish or moderately bearish, depending on your view, right? And you will have a risk that is defined. So if your view goes wrong, you lose little. If your view goes right, you gain a lot, and then that exceeds your loss. So that's a trick in the stock market. So that's a problem by moderate bearish views what I have. So I hope it helps you to frame your own view on the market based on all these studies that you have done on the different parameters. If that helps you in any way, consider hitting the like button, subscribe if you're not done, and share it to your friends. We have very few subscriptions and appreciate your help. So thanks a lot. Happy trading, happy learning, happy investing. Bye.